I'm Matt Gray, and I'm joined weekly by Dr. J. We're both certified financial planners, and we talk about how child-free life impacts your finances. This is Child-Free Life and Money.
Matt Gray here with Dr. J. Again, episode 6, Child-Free Life and Money. And today we're diving into life insurance for child-free people and why it is or is not needed, which is one of the things we talked about earlier. I believe it was it episode 2, 3, when we were talking about basic financial planning, that life insurance is definitely one of those things that's a little bit different for child-free people. So we'll dive in with that. And Dr. J, why don't you jump in a little bit with your experience with life insurance and what that looks like for child-free people?
Well, let me ask you a question, Matt. Do you have life insurance?
No, I don't.
Why?
Because I had kidney failure before I bought any.
So you can't get it?
Now I can't get any.
And even if
Ever.
you could get it, would you have it?
Probably not. Maybe a tiny policy, very small one, maybe.
I mean, this is kind of part of the discussion. So when I ask people, hey, do you have life insurance? If the answer is yes, I don't ask the question, but kind of the next question is, well, which friend sold it to you?
Right.
I mean, you and I are both fee only. We don't make money off commissions. And so I can hate on anyone that's making money on commissions, and we get the hate emails afterwards when we're saying, oh, well, but the reason why life insurance is sold is because it makes people commissions.
Yeah.
I mean, it is. I mean, I've got some life insurance because my wife gets it for free through work.
Right.
I'm not going to turn down free. Okay.
Right.
Just nah. But I mean, I don't know. So my wife and I are married. If one of us dies, we'd be okay. The biggest expense we'd have is our mastiffs,
Yeah.
But we both do fine. It gets hard to justify spending money on life insurance. What do you think?
Yeah, I think for a lot of child-free people, we'll use your example, for instance. I tell a lot of people, a lot of the clients I work with who don't have kids, I'm like, well, you both work, you both could support yourself just fine. The only thing, well, there are some instances, maybe we'll get into a little bit later, that life insurance does make sense. It's usually for a fairly short window, admittedly. But yeah, most people, it's just, you don't really need it if you don't have kids. You don't have to protect that. Sometimes when you've got kids, you either have more significant childcare costs and or one spouse or partner staying home or at least maybe part-time, to kind of help take care of the kids. So with all of that, that in that instance, you would need life insurance more as maybe one of the partners becomes more of the primary breadwinner. You need to protect that income, things like that. But when you've got single or dual income with no kids, no one needs anything from you. No one's relying on you particularly, not in the financial sense. And so there are instances when you do need life insurance, but they're much fewer and further in between, I would say.
Well, and I lose my mind on this one because well, my life insurance is an investment. And I'm like, okay, so here's my new analogy. Okay, let's just talk about hybrid life insurance or these whole life or all different terms because they're marketing. They say, well, it does investment and it does insurance. And I'm like, that's like a spork. It's a fork and a spoon at the same time. It does neither well.
Right.
Like what do you think about those?
Yeah, I don't particularly like them. They normally come in permanent life insurance structures. So I don't know if I've ever seen a term life insurance policy, which it's not your whole life. It's just for a specified number of years. I don't know if I've ever seen one of those with an attached investment account or anything like that. Usually it's going to be the permanent life. And most people, child-free especially, don't need life insurance for their entire lives. Again, some very few people do, some do, but it's an oversold product. So again, I don't like the idea of mixing those two things. You use spork, which is a good one. I always try to make it a little bit grosser when I describe it. I'm like, it's a toilet that can also make paninis. And you're like, that's gross. I don't want that. And I'm like, you're right. We don't want that. We want a panini maker and a toilet, and we want them separate. Thank you. And so I think when you get both, to your point, neither of them is done very well, and you're paying extra to have them combined. Usually, I don't want to say always, but quite a bit of the time.
Okay. So let's go with this though, Matt. And I'm setting you up. I apologize. But so then if these products aren't good for most people, why are they so sold? I mean, like I see stuff all the time, like even like on kids, you need an insurance policy when they're born and throughout life and as investment. Why are they so sold to everybody?
Because they make pretty good commissions for the people who sell them. They're incentivized fairly healthily to sell them. And so that's part of the reason the fees are relatively high as well, because they've got to pay the person who's selling it, which is often why if you go talk to a life insurance person, they'll say, oh, you could do term, but what if, this is what, and I'll give my opinions on this because I've been directly affected by this situation. Well, what if you get sick of some kind and then you can't get in a policy? You should have a policy that you can have for your entire life if you need it. A lot of people to kind of use fear tactics and get you to buy things that you don't necessarily need. And this is coming from someone who in his 20s was diagnosed with kidney failure and cannot get disability insurance or life insurance. And I would still say you probably don't need a whole life policy.
So, okay. So I'm going to open up this one because this drives me crazy. This is like your doctor getting paid to prescribe you medications.
Right.
Like, this one works for it. And to give you an idea, for those that don't know how this works, they either get a commission up front, a big old chunk of money, or they get money every single month you pay for the rest of your life.
Mm-hmm.
It's called trails, where, they're just getting this forever for doing nothing. Well, duh, of course that's why they want to sell it. Like, it's like,
right.
It's like asking my dog if he's hungry. The answer is yes. Well, do you need life insurance? Yes. Like,
right.
It drives me crazy.
And they hold themselves out as financial advisors, financial planners a lot of the time, and they'll put together a financial plan, and oftentimes, or almost exclusively, I'd say, I haven't seen thousands of them, but I've seen dozens, they end up with the result of you need life insurance pretty much every time. So it's definitely an interesting approach where they're oversold, particularly to child-free people.
So Matt, let me give you the other one. So I'm seeing a lot of this one online right now. Well, you should use an IUL and do forever banking for yourself and never help me understand what the heck that garbage is.
Oh, goodness. All right. So with these, anything where someone tells you that you'll get free income, tax-free income later in life from an insurance product, it's not really true. They're using the word income to kind of suck you in, basically. So with an indexed universal life policy, what they basically say is you can use it as an investment account. It's also life insurance, and you'll get tax-free income later on down the road. And then what you do is when you pull money out, you're not actually taking distributions, you're taking a loan from the policy. So then what often happens is you go, okay, well, I don't want this policy anymore. And they go, well, too bad, unless you pay the entire loan off. And a lot of people say, well, I took out $150,000 over the last 5 years. And they'll say, yeah, pay it off and you can forfeit it. Otherwise, you're going to have to basically let the death benefit pay off your loan. So you kind of get hooked in to keeping this policy for the rest of the life of, well, your life, really. So again, I would say IULs have almost no application, very limited application, but again, high commissions, they suck you in with these kind of, I would almost call them bait and switches with terms of what they actually are. So
yeah, by the way, I have a feeling Matt and I could bash on some of those a lot. Yeah. Here's the thing. You want your insurance to be insurance, your investments to be invested.
Right.
If you need life insurance, we'll talk about some reasons why you need term life insurance for a period of time, 10, 20 years, certain amount. Cool. You're buying insurance.
Correct.
That's it. Right. You're not buying an investment. And with insurance, what you're doing is you're assigning risk. So you're saying to somebody else, your problem, I'm paying these payments and you deal with it. Well, it doesn't matter if it's life insurance, car insurance, long-term care insurance, all the same concepts.
Yep.
Then what you'll see, if you see anything but term life insurance, it's all some mix of investing in and insurance together, hybrid. You'll see it as whole, IULs. They keep changing the name every couple of years, until like they get bad press and that name's no good anymore. And, like they just change it for sales. It's like, oh, and it's so driven into our brains that you need this, life insurance. You need 10 to 12 times your income for life insurance. Cool. You do. If somebody needs your income, which is in most cases not,
Right.
or some of those other cases. So Matt, you want to talk about some of the other cases where, life insurance might fit?
Right. And I've got one that might upset you, where I do believe whole
Uh-oh.
life may not be needed, but it may be appropriate and can make sense. So I'll start with term life, because that's the one that you and I both agree on. Everyone, if they're going to get life insurance, most likely is going to need term life. So with child-free people, there's a few things where you may find yourself in a position where you may not absolutely need it, but it will benefit you if something were to happen. So for instance, say you have, again, one example we use quite a lot because it does make a difference is very wide gap between the incomes of partners in a couple. So one, again, social worker, one an anesthesiologist or something like that, and you've got this big difference. Well, because the combined household income is $400,000 a year, something like that, and then you can go buy a house, it's, I don't know, $1.5 million or something like that. Well, if something were to happen to the anesthesiologist and the income drops down to $40,000 per year, you can't afford your $1.5 million house anymore on $40,000 a year. Now, hopefully you've been saving with that kind of income, but it still may not cover it in the years just after purchasing that house. So again, significant debt or a lifestyle that you would want, it's not a need, you would want to be maintained if the higher earner were to pass away. In those instances, you insure the person who has a higher income. And to Dr. J's point, a very quick rule of thumb, which we can debate what that looks like going forward, but as a quick rule of thumb to start, 10 times your annual income, start there. So high debt, two incomes that are very different are very common reasons that you may need a policy. Again, as you pay down the house and as you continue to save more, it often isn't going to be all that long that you need it. Maybe 10 years. Term for 20 years is the most common policy I'd probably see out there, but often it's because you have kids, or not, our listeners don't have kids, but for someone who would have kids, the kids will be mostly self-sufficient by the time they're 20 or close to. So anyway, I think those are the two for term life where I normally say, yes, absolutely. Or I do have a client where one of the partners works like 2 days a week as a part-time like nurse's assistant, and the other one works in IT. And they're on track to retire in about 8 years. But if something were to happen to the IT employee, then that kind of blows up the plan a bit. So they did get a 10-year, $1 million policy to kind of fill that gap.
Yeah, and I think this is slightly where we differ. Look, I'm pushing people to be debt-free. If
Right.
you're debt-free, the need for term insurance is going down to so low.
Correct.
Even if you're on that, even if you have those income disparities, if you're debt-free, you'll be fine.
Correct.
That's kind of that balancing act. Where I have seen another kind of take on this in the term life is if you're caring for a family member that might actually need your income. So you're caring for mom or a family member, maybe you're trying to help out somebody with their child or whatever. Yep, that might be a case that it fits. Sometimes also that's part of people's estate plan of, hey, I want to take care of mom for the next 20 years, so I'll have term life for the next 20 years because she's not going to outlive me by 20. That's kind of the plan. But if need be, that can go there. You can also put that into a trust with actually directions for how mom can use it and those things. So there are some places. I think the other one for term life that might fit, or some other complex life policies, is when you have a business, you got like a buy-sell agreement and you got to buy yourself out or somebody else buy somebody else out. That's actually kind of more of a business topic, and it's more of a business investment. But it is one of those where you go, well, my work wants to do this life insurance policy to buy each other out. That's normal. That makes sense. And actually, it's a cheap way to buy each other out. So there's like these weird things. But I mean, we're talking about like a small percentage of child-free folks. I mean, single digits, probably.
Yeah.
We're not talking about large percentages. And I thought of that anesthesiology example. Well, that's a great example. Disability insurance is a bigger issue.
Still huge. Yeah.
If that person, anesthesiologist, is disabled, now they're not no income, and you got to take care of their medical needs. I mean, that's huge.
Yeah. Big time.
And life insurance will not help you at all on that.
Correct.
So that's where, I'm like, let's shift your mix of insurance to have the right insurance. Not let's say, hey, let's throw it out. I think the other one that some people do with insurance, sometimes your employers offer it for so cheap that I just say, go ahead and do it.
Right.
Even if it's some of them, you got to pay a couple bucks or I've had people where like you pay like $5 a pay period and it gives you $500,000 coverage. I'm like, fine.
Fine. Yeah,
It's
do it.
so
Yeah.
cheap. You
Right.
don't have to do the medical exam. Fine.
Right.
And it really, that's no different than buying a lotto ticket at that point. Like you bought the
Pretty much,
ticket,
yeah.
if you die, end.
Yeah.
But one caution on this, if you are going to buy life insurance, make sure the beneficiaries are set right.
Correct.
I've had a few people where someone passed and the ex was still listed as the beneficiary.
Yep.
And once that happens, it's gone.
It doesn't
There is
happen
no
a
getting
lot.
it back, nothing.
But occasionally you see it, and it's like, it's one of the things too where sometimes you're like, oh, I didn't really want it to go to them, but I guess that's where it goes. But then there's the ones where you're like, I definitely didn't want it to go to my ex, but now they just got paid out quite a bit. So yeah, I think those are all good points, and those are good reasons to use term. The one you actually used my example, the one I was going to come back to in terms of where you may potentially, where a whole life might make sense, and it is in the cross purchase agreement. If you've got multiple business owners and you're not planning on selling the business, you're going to be operators for a long time, then it does make sense, particularly if the business partners have their own romantic partners who don't know anything about the business. You don't want them to be your business partner once your actual business partner passes. They don't probably want to be your business partner. So you have that insurance in place, paid for by the business, to your point, where it'll give their romantic partner some money. You get that business interest. Now you are operating that business on your own. That makes sense. Whole life just means it'll go for the however long they're around your business partner. Term life, if you're planning on selling the business in 10 years or something, term life will work just fine for that. So it depends on what your plans are. But that's my other idea you took from me, Dr. J.
Well, and I would try to structure that as a stacked of whole life, 10 or 20-year plan, and and you could do some renewals on there. Yeah, it's not going to get you the whole life, but it's not going to get you the whole thing. But most term life, you can get a rider that says, "Hey, I can renew as long as," and they'll up the premium and stuff like that.
Right.
I'm just trying to stay away from the sport or your panini toilet maker or what. That's disgusting.
Anything that grosses you out, because those insurance policies gross me out a lot of the time.
I don't know. I think the other one to look at when you look at these life insurance policies or any insurance policy, you got to look at what's written in there. The fine print on each of these gets kind of crazy.
Mm-hmm.
There's usually an exclusion for a couple of years, suicide, a few others. But then what? And like
right.
What happens if you miss a payment, and what can they do that? Also, what happens if you misstate something? It gets weird. And insurance companies, they have a good job, and I'm all for insurance, but they will try to find any way they can not to pay it.
Correct.
So there was a large insurance company recently that got smacked because they would see somebody dies, shut off the disability payment, but not make the life insurance payment.
Mm-hmm.
And I'm like, you knew enough to turn off the disability because that's costing you money,
mm-hmm.
but they have to put in a new claim for the life insurance. I'm like, that just sounds shady.
Yeah.
And I think that's a hard thing to work through. And I don't know. So Matt, what do you do though when the clients come to you and I got $1 million in whole life and I got this, that, and the other. And I mean,
now you've got a minefield of things you've got to deal with, because you probably don't, first of all, need it, like we've already discussed. There may be an instance in which you want it, but even if you want some life insurance, I'd probably still say term. If you're trying to do something like, protect your partner and make sure that they'll be fine if something were to happen, even above and beyond what you need, then you might want it. But with whole life, a lot of the time there are things like surrender costs, or there could be capital gains taxes if you invested it and it grew over the last couple of years, something like that. So oftentimes financial planners will say, you don't need this, so we can either nip this in the bud and prevent you from paying a bunch of premiums over the years that you don't need to pay, but what's the cost of doing that now, and is it worthwhile? I've seen policies where you kind of get sucked into it and you go, it's there now, and they got their hooks in, and it makes more sense to just keep it for now. So there's a lot of things to evaluate on a policy at that point. But once you sign, there are often in the small print, lots of things that say, in the first few years, this is how it's going to go, or something like that.
Yeah, and I think I'm going to contradict myself a little bit and say this is an opportunity for a spork. And what it is
Okay.
sometimes you can convert a long-term care, a life insurance policy into a long-term care policy, like an annuity long-term care combo.
Yep, you can.
There are a few of those. Now, by the way, none of those are great, but
Hmm.
we're kind of like trying to make a mess into something that's helpful for you.
Hmm.
And the bonus is, so I was looking at there's a product, it's an annuity slash long term care combo. The underwriting for the long term care is actually much easier. So if you've got a medical issue, you might get it this way where you couldn't get a normal long term care policy. And if you already have the life insurance policy, then you can convert it.
Mm.
It's one of those like weird ones where like, okay, sure, I don't like the whole life. I really don't like these other combo products, but it's better than the whole life. And
Correct.
you
Right.
can do it the 1035 exchange, so you don't pay taxes on it. There are some ways to do that. And what that does now is it turns something you don't need, which is life insurance, into something you do need, long-term care. So
Right.
it's not perfect. And sometimes I feel bad because I'm telling people, I'm like, yeah, you were sold something you don't need.
Hmm.
Now I'm going to give you bad news. And then we're going to try to make it better, but I'm not going to be able to make it perfect.
Right.
And then the other thing I get, I don't know if you've seen this, Matt, but I get, well, but I don't want to tell so and so that I canceled the plan because it's their friend, nephew, family member who sold them the plan. And I'm like, that's your own personal, but
That's different. Yeah.
somebody who took advantage of your personal relationship to sell you a
Hmm.
product.
Right. Right.
Um, and it's just like it's hard. And I think the other thing you get from clients is, well, but I've already paid so much. This is the sunk cost
Sunk
fallacy.
cost fallacy. Yeah.
Just going, oh well, I'm like, dude, just pay the stupid tax and move on. Like, at some point, where do you want to pay this for the rest of your life? And then they're like, well, I mean, I could. And I'm like, this payment's coming up again. Let's decide before that next time.
Mm.
And you're
Mm.
right. If you got the loans, you're stuck
Right.
until you pay those off in some way or another.
Right.
And I've seen some people get stuck in that and almost no way to get out. Like you're
Right.
like,
Yeah.
yep, just keep paying and just call it a day. Like
Yeah.
the cost to get out would be so high. Let's not do it.
Right. Right.
I think the thing, if you're going to buy life insurance, is to talk to a fee only fiduciary, financial
Mhm.
planner, also about it, who's not selling you the product.
Right. Right.
Then we can say, hey, that makes sense or not. And it doesn't have to be Matt or I. It could be anybody in that. But I think it's somebody who's not selling it to you.
Correct. Right.
Does that make sense?
Yeah, fully. I mean, anyone who's selling you something, and as we've already discussed, making a nice little paycheck from selling it, of course they're incentivized to sell it to you. That's their main goal. That's how they get paid. And and I want to be clear here, not all insurance salespeople are bad or trying to pull one over on you, but it just happens to be that, everything has you could theoretically use life insurance for everything. It's just not the best vehicle to use for most things. What do they say? What's the saying? When everything looks like a nail, or no, when you're trying to hammer in a nail, everything looks like a hammer or something. I don't know. I just butchered the hell out of it, but it's something like that. And that's what life insurance salespeople tend to kind of lean to. But there are some great ones out there. But yeah, I think life insurance can be a tricky product, and when you have someone getting paid for selling it, they'll find a way to sell it. That's where, again, people who don't sell products, fiduciaries that don't make commissions, come in, work as your agent, in that basically meaning they're on the same side of the table as you. They don't want you to buy something that's going to, make your life more difficult or waste your precious dollars that you've earned.
Yeah, and I'm gonna circle back. So Matt flew by. So insurance salespeople often call themselves financial advisors,
Mm.
okay, or financial planners, and part of that's because those terms are not legalese. Okay, it's
Right.
not like if I call myself an attorney, I have to have something behind it. So it confuses people.
Mm.
Okay, so let me just give you a quick rundown of some financial terms that you're looking for. All right. So certified financial planner, that happens to be what Matt and I are. We've actually gone through the training, been certified, passed courses, have to have a bachelor's, have to have 6,000 hours, you got to have experience, you got all of this to be a financial planner. We're trained to do that. We are also fiduciaries, which bottom line is got to put your interests ahead of our own. There's a whole lot more to it, but let's just go with that from the simple.
And I'd say legally.
Legally.
have to.
Yeah, we're required.
There's a legal
Okay.
obligation to do it.
We also both happen to be registered investment advisors, which isn't saying we're better. We're just saying we have to register with the state to do investment advice. And we're also both called fee only. So we actually only make money from our clients. So you pay us for our time or our structure. We got a slightly different structure on that, but we get paid. We don't make commissions. We don't make any money to sell you products. So that's a different way of looking at it. Okay. Mm-hmm. That is different than somebody who says, hey, oh, well, I think this is what you should have. I think it's in your best interest. You'll hear this term. Well, that can be a little vague.
Right.
Well, yeah, I think that definitely could help you when you die. Sure, that is best interest. Might not be the right fiduciary or financial decision. And that's where I feel bad because people get tricked. Oh, I talked to my financial advisor. And I'll look it up and I'm like, oh, they sold you insurance products.
Right. Yeah.
It's just, and then they'll meet with me and they'll go, wait, my financial advisor didn't talk to me about any of this stuff. I go, I know. Right. Because they're not working on comprehensive financial planning, all this. And then the third part of this, or last part of this is you also have to ask them, how is this different because I'm child free?
Right.
And if they don't know, you just go on to someone else.
Correct. Yeah. Because I think I would even say within the fiduciary RIA space, in CFPs, things that we do, a lot of those advisors would even say, there's not a lot different. Sometimes they would even go that route, whereas you and I will, get on our soapbox all day. We'll start telling people how it is quite a bit different and what the needs are of people who are child free. So I think there are some advisors who would be aligned with us and say that there are quite a bit of differences, but not spend a ton of energy looking into it particularly, but they'd say, yeah, I can understand why you don't need life insurance as much or something like that. But I think you definitely need to ask those questions. And maybe that's a good podcast topic later. I think every single advisor at some point has written the article of what to look for in a financial planner. And then imagine this, it's always the characteristics that identify them. And I've written the article. I don't know if you've written that article yet.
I have.
Yeah, we've all written that article. I think it is important, though, maybe that we would talk about it where, especially for child-free people, what to look for in a financial planner, specifically because their needs are different from the standard needs. And like we've talked about quite a bit, child-free, like the world of financial planning has been basically built for passing money on to like next generation and also preparing them to get educated, stuff like that, taking care of a family, whereas we have a different family structure being child-free, and what taking care of your family means something very different. And so finding people who can understand that, do understand it, and can accommodate those needs is important.
Well, and I think I'm also setting up a trap. Let's be real. If you ask somebody, and by the way, you ask these questions to financial people, attorneys, others, how is it different because I'm child-free? Mm-hmm. It's a trap because if they go, well, what if you change your mind?
Oh, yeah.
Aha.
Yeah.
You are not the right person for me.
Yeah.
All of those classic bingos.
Yeah.
It's just a different way to do it. I did an article for Kitsis on, what child-free financial planning looks like. And at one point I had written that as, 15 things that are different for being child-free. And now my new thing is, show me something that's in the financial plan that is not impacted by being child-free.
Right.
Let's do the inverse. And people get stuck on that. And I think life insurance is a great example of, you have to go to extreme cases before I'm going to go, yeah, let's get a life insurance policy for it.
Right.
Where others with like parents, it's like, yes, you need that immediately.
Correct. Yeah, exactly. I mean, if in the past, when I've worked with families, it's basically as soon as they have kids or are thinking about having kids, I'm like, life insurance estate plan. If you don't already have it, get it in place now. Whereas like we said, very specific situations for child-free people. And maybe like the final thoughts are, if you're relatively young, I don't know, under 45, probably, I don't know the exact quotes that are out there today, but relatively healthy, relatively young, and you want to have life insurance, it's still quite affordable to get a term policy. Not that I would just advocate randomly buying life insurance, but even to your point earlier, Dr. J, like, oh, you can get it for $5 a month or something through an employer to get $500,000 or something. If you really want it because you want your partner to be able to retire immediately or something, if you were to pass away, or the one thing I always say, if you want your partner to be able to properly mourn and maybe not work for a year, you can do it. And we're not bashing life insurance as a whole. And I want to make that clear too. There are instances where it makes sense. It can also be a want, but it's probably not needed in most cases, which is what I think we're trying to hammer home as well.
Did you just say that your loved one has to mourn for you for a year?
I did, yeah. Mine would be
do you have to wear black the entire time and like, you
know, formal mourning for a year, and then, you know, emotional probably indefinitely. So I'm gonna need a lot of life insurance probably.
Well, but if you do that, then they might just want to, like, you know, call it a day and cut it short and, you know, claim on that policy.
They'll have a bunch of brand new black outfits to wear.
They're like, I've already bought the outfits, might as well.
No, but you know what I mean. If someone's gonna, not to mourn for a year, but to be able to say, you know, whatever affairs need to be taken care of and all that kind of stuff, it can be a really tough time, particularly if you don't have, you know, if it's a spouse or a partner handling a lot of those things, to have them to be able to step away from work for a bit or whatever it is can be pretty helpful. So again, I think the bottom line it comes to is talk to a financial planner, specifically a fiduciary, fee-only, non-insurance salesperson financial planner, who will be able to guide you on whether or not you actually need it, be able to facilitate a conversation if you really want it. They'll play probably devil's advocate to some extent to see what's necessary, what you would want, and then also make sure that you just get exactly what's best for your situation, because it can vary, but just be wary of people coming in and trying to say that you absolutely need it.
Absolutely. And if somebody's trying to sell you something, you always got to go, why?
Why? Yeah, yeah, exactly right. Cool. Well, I think we've opened up Pandora's box in terms of life insurance. And yeah, if you've got more questions about this, or you have a life insurance policy that you were recently sold, something like that, that you're now questioning because we've caused you to doubt, you can email us, childfreepodcast@gmail.com. Of course, Dr. J, his website, childfreewealth.com. Is that right? I believe so.
You got it.
All right. Man, it's weird quoting other people's stuff. And then my website's anthrophywealth.com. Either way, I know either one of us would be happy to talk to you. I know Dr. J does a free consultation. I have a couple meetings before you'd ever become a client that are free as well. I don't know if I really call them consultations, but I'm happy to talk to people ahead of time. But either way, let us know if you've got further questions. Any final thoughts, Dr. J, before we get out of here?
Hey, your financial plan needs to reflect your life, not everybody else's. Correct. This is just one of those changes that child-free happens.
Definitely. Love it. We'll see all you back here next week. Thanks for listening.
Child-Free Life and Money is an educational and entertainment podcast only. For further disclosure, look at our websites at www.anthrophywealth.com or www.childfreewealth.com. Either way, consult with your financial planner to see if anything we discuss pertains to you. Thanks for listening.